Bloomberg. Federal Reserve Bank of New York President John Williams said the economy is headed in the right direction, and it will likely be appropriate to cut interest rates later this year. Speaking in an interview with Axios, Williams said officials want to see inflation data that continues to move toward the central bank's 2% goal.
At some point, I think it will be appropriate to pull back on restrictive monetary policy, likely later this year, Williams said in the interview published Friday. But it's really about reading that data and looking for consistent signs that inflation is not only coming down but is moving towards that 2% longer run goal. Top Fed officials hammered home the message this week that the U.S. central bank is still on track to cut interest rates this year, just not anytime soon. Read more. Top Fed officials bolster case for patient stance on rate cuts. As recently as mid-January, investors and some economists were betting on the Fed to start lowering rates at its March 19, 2020 meeting.
Markets have since significantly dialed back expectations for early and rapid cuts, shifting wagers on the first move to June or July on the heels of reports showing job and price gains well above forecasts in January. The patient approach by policymakers has been largely validated by data released in recent weeks.
The Consumer Price Index rose by more than forecast in January, and prices paid to U.S. producers also climbed.
As a result, economists forecast the Fed's preferred gauge of underlying inflation to rise at the fastest pace since early 2023 when it's released next week.